Welcome back, traders, so let's get started. This powerful trading strategy combines inversion fair value gaps with classic fair value gaps, creating one of smart money's most effective setups when applied correctly. In a bullish scenario, this setup plays out when price returns to a fair value gap formed inside a bullish change of character leg that appears during a strong downtrend, and then shows a clean rejection. Once price taps into that CHOCH fair value gap and forms an inversion fair value gap inside it, it often reverses sharply and continues pushing upward, going completely against the previous trend and confirming a potential shift in market direction. Of course, it's not as simple as it sounds. There are several important criteria that must be met before the setup becomes valid. Similarly, in a bearish scenario, the same logic applies, but in reverse. The setup occurs when price forms a bearish change of character with inefficiency during a strong uptrend, and then taps into a bearish classic fair value gap, signaling a potential shift from bullish momentum to bearish pressure. Now you might ask, what makes this setup so powerful? The psychology behind it is simple, yet incredibly effective. The first key element that gives this setup its strength is when price breaks a protected high or low for the very first time during a strong trend. This signals that the dominant side, whether buyers or sellers, is losing control, and the market is preparing for a potential shift in direction. The second critical factor occurs when price taps into a fair value gap within the change of character leg, rejects from it, and simultaneously forms and respects an inversion fair value gap inside that higher time frame FVG. This overlap creates a powerful layer of confluence, confirming that momentum is shifting in the opposite direction. So, in a bullish scenario, when price forms a CHOCH by breaking and closing above a protected high in a strong downtrend, then develops an inversion fair value gap within the higher time frame FVG, that combination dramatically increases the probability of a sharp move toward buy-side liquidity, completely countering the overall bearish narrative. This is exactly what makes this strategy so effective. It's not just technical, it's deeply rooted in market logic and institutional behavior. Now, before diving into the details of how to execute this trading setup, let's quickly recap the most important concepts you need to understand about fair value gaps and inversion fair value gaps. By closely watching how the price behaves inside the gap, you can gain valuable insights into what's likely to happen next. Let's make it crystal clear. Inside every fair value gap, there are three key levels you should always pay attention to: the premium high, the discount low, and the midpoint. Now you might ask, which one really matters the most? The 50% midpoint of the fair value gap. If price returns to this level and shows respect or rejection, it's a strong signal that the market may continue in its original direction. However, if price breaks through the midpoint without any rejection, that's often a clear sign the original imbalance has failed, and price may soon head in the opposite direction. Alright, now let's talk about inversion fair value gaps and how we can take advantage of them. An IFVG forms when price completely disrespects a regular fair value gap, meaning instead of reacting to it, price breaks and closes straight through it. When this happens, the original fair value gap flips its role and often acts as a new support or resistance zone, depending on the breakout direction. For example, when price breaks straight through a bullish fair value gap without showing any respect or reaction, that gap flips its role and becomes an inversion fair value gap. Now, instead of acting as support, it's more likely to hold as resistance, creating perfect opportunities to go short. And if we play out the chart, you'll see that price retraces back into the newly generated inversion fair value gap, respects the midpoint, and then continues lower with strong momentum. That's exactly why highlighting inversion fair value gaps on your chart is so important. They give you valuable clues about where price is likely to go next. Now, let's break down the details of our trading setup and see exactly how to execute trades using this model. But before we continue, to apply this strategy correctly, you'll need to work with two time frames. First, use a higher time frame to analyze market structure. Here, you'll look for a change of character and the fair value gap connected to it. Then, zoom into a lower time frame to spot reversal and confirmation signals. This is where you'll look for inversion fair value gaps and identify your entry point. Now, let's go step by step and see exactly how this plays out. The very first step is to analyze the market structure on the higher time frame and determine whether the price is in a strong uptrend or downtrend. So in a bullish scenario, the first step is to identify a strong downtrend. To confirm a strong downtrend, you need to see at least 3 consecutive bearish BOSs. On the other hand, to confirm a strong uptrend, the price must form 3 consecutive bullish BOSs. Once you've identified that, the next thing to look for is a higher time frame change of character. So if price breaks and closes above the most recent BOS's high of a strong downtrend, it signals a bullish change of character, suggesting that sellers are losing control and the market is likely to shift direction. Now, once a market structure shift is confirmed and we expect the price to move higher, the next step is to look for a buying opportunity. At this stage, we focus on spotting a bullish fair value gap that forms within the change of characters leg. As we mentioned earlier, FVGs often act like magnets, pulling price back in before it continues upward. So, after identifying the higher time frame CHOCH and its fair value gap, the next step is to zoom into the lower time frame and wait for the price to return to that higher time frame fair value gap. Then, closely monitor price action inside the fair value gap and look for any sign of rejection. This confirms that price is respecting the higher time frame gap, and that's your first layer of confirmation. Then, closely monitor price action inside the fair value gap and look for any sign of rejection. This confirms that price is respecting the higher time frame gap, and that's your first layer of confirmation. Once you have that, the next step is to look for a violated fair value gap, either inside the higher time frame FVG or just outside it after the rejection. This becomes your second layer of confirmation. When this inversion fair value gap forms, it often acts as a new support zone, and that's the area where you look to open your position. If a market structure shift also occurs at the same time, that adds another powerful layer of confluence, making the setup even stronger. This market structure shift tells us that the temporary bearish move is ending and bullish momentum is likely returning. At this point, price is expected to realign with the higher time frame trend, which is now bullish. With all these confirmations in place, we can now expect that price will return to the zone of the inversion fair value gap, which now acts as a support, before continuing upward. For executing this trade, we have 2 different entry options based on how aggressive or conservative you want to be. Option 1. Place a buy limit order at the lowest or highest point of the inversion fair value gap. Option 2. Use a more refined entry and place your order at the midpoint. This option usually gives you a better risk-to-reward ratio. Your target should be the nearest buy-side liquidity on the current time frame, or, if you're aiming for a bigger move, a key level on the higher time frame. As mentioned before, this strategy works with 2 time frames. I usually combine the 1 hour with the 5 minute for this setup, but you can also use the 4 hour with the 15 minute, or even the 15 minute with the 1 minute. The key rule is simple. Your entry time frame should always be at least 2 levels lower than your main time frame. So now that we've fully covered all the rules, details, and everything you need to know to apply this strategy correctly, let's go through a real chart example to solidify what we've learned so far. Here, we have the Pond Dollar 1 hour chart on the screen. As you can see, price was in a strong uptrend, forming at least 3 consecutive bullish breaks of structure to the upside. However, that changed when the price broke and closed below the lowest point of the most recent BOS, forming a clear bearish change of character. This shift signals that the bulls are losing control, and the market is likely preparing to reverse direction to the downside. From this point forward, our focus shifts to looking for short opportunities. Now, if you look closely, you'll notice that price has formed a bearish fair value gap inside the change of characters impulse leg. This is exactly where we want to keep our attention, because it represents the ideal area to look for short entries if the price retraces back into it. So everything we were looking for is here, a strong uptrend with at least 3 bullish BOSs, followed by a clear CHOCH and a fresh fair value gap inside it. Now that everything looks perfect, I'm going to zoom into the 5 minute time frame to closely monitor the price action inside the 1 hour fair value gap zone and identify a suitable entry point to go short. Let's play the chart forward and see how it unfolds. As you can see, price pushed higher and eventually tapped into the 1 hour fair value gap, then showed clear rejection, confirming that price is respecting the zone. And that gives us our first layer of confirmation. Now, if we take a closer look at the price action inside the gap, you'll notice something interesting. Once price filled the fair value gap, it reversed sharply, forming a market structure shift on the 5-minute chart. This tells us that buying momentum is fading, sellers are stepping back in, and price is realigning with the 1-hour time frame's new bearish trend. Before that, price also formed an inversion fair value gap by breaking and closing below this bullish 5-minute fair value gap, which now flips its role and acts as a new resistance zone. This gives us a perfect area to look for a short entry if the price pulls back into it before continuing lower. With all these confirmations in place, I'm taking the aggressive entry approach, setting a sell limit order right at the lowest point of that 5-minute inversion fair value gap, and targeting the sell side liquidity below this swing low as my take profit level. Now let's play out the trade and see how it unfolds. As you can see, price pushed a bit higher, triggered our sell limit order, then quickly reversed its direction and drove down with strong bearish momentum, perfectly hitting our take profit. Now let's move on to the next real chart example. Here we have the euro-dollar 1-hour chart on the screen. As you can see, price is in a strong downtrend, and bears are clearly in control since the market has already formed multiple bearish breaks of structure, more than 3 to be exact. Now, if you look closely, you can see that price has formed a bullish change of character with a noticeable imbalance, breaking and closing above the latest major high. This indicates that sellers are starting to lose control, and the market is likely preparing for a shift in direction. Once the market structure shift is confirmed and we expect the price to move higher, the next step is to look for a buying opportunity. Next, I'm going to highlight the fair value gap formed inside the CHOCH's impulse leg. This is exactly where we want to keep our focus. It's the ideal area to look for long opportunities if price retraces back into it. As we discussed earlier, fair value gaps act like magnets, drawing price back in before continuing in the original direction. So now, all our criteria are perfectly aligned. A strong downtrend with at least 3 bearish breaks of structure, a clear CHOCH on the 1-hour chart, and a fresh unmitigated fair value gap inside the CHOCH's impulse leg. Once we've identified the higher time frame fair value gap, the next step is to zoom into the lower time frame, such as the 5-minute chart, and wait for the price to tap into it. That's where we'll look for confirmation and entry. Now, with the 5-minute chart on the screen, you can see that after price tapped into the higher time frame fair value gap, it immediately showed rejection, confirming that price is respecting the higher time frame imbalance. That's your first layer of confirmation. If we look more closely at the price action inside the 1-hour fair value gap, you'll notice that price has violated this bullish FVG by breaking and closing below it, which resulted in the formation of an inversion fair value gap. This IFVG is now more likely to hold and act as a new support level, giving us a solid entry point for a long position. From here, the expectation is straightforward. Price will retrace into the IFVG before continuing its move to the upside. That's your second layer of confirmation. Also, if you look carefully, you'll notice that price has already formed a market structure shift at the same time, adding yet another powerful confluence to this setup. With all these confirmations in place, we can now anticipate that price will return to the inversion fair value gap zone before continuing its move toward buy-side liquidity. So, I'm setting my entry at the midpoint of the inversion fair value gap, with my stop loss a couple of pips below the swing high. For the take profit, I'm targeting the buy-side liquidity above this swing high. Now let's see if our trade plays out successfully or not. As you can see, my order has been triggered and the price pushed higher with great momentum and eventually hit the TP. That's it, traders. Thanks for watching. I hope you found this video valuable. If you did, hit subscribe and turn on notifications so you never miss an update. Drop a comment below with your thoughts or topics you'd like to see next. Your support means the world to us. See you in the next video.